right, welcome everyone. Welcome to the Hurley Investments commentary for the 14th of December. We're going to have trade findings for the rest of this week. We're going to have one more commentary next Monday, and we'll be done for the year, and we'll start again like the 4th of January. But to start off with today, the S&P fell 1% last week. We were up 3 or 4. Nice to see. Record highs for the S&P after 2 weeks, win streak of 2 weeks. So this was the first down week in 3 weeks. The Dow has been down 2 out of the 3 weeks. NASDAQ has also been down 1 out of 3. But pretty interesting. Declines are led by real estate, financials, and technology. You'll notice today we took you out of a lot of Bank of America leaps, took our profits over a 50% return. A vaccine started. Again, Maud or Babu, if you want to talk about how hopefully that'll slow down the process of infection. I'm not sure how it will, but I think it'll protect those that are willing to work with those of us that get sick. That will be very interesting to see how that vaccine is going to be. Again, as I do my numbers, there's not really enough that's going to be helpful till May, June is what we're looking at. I'm probably going to say after June, especially if some of you got to take 2 vaccines. Maud just says it's going to take a while. But again, if we can cut down on the infection rate to have more ICU rooms available, that's the key. The key, in my understanding, is making sure that we have enough rooms available to treat those that need treatment. Seasonal adjusted claims, more people are filing for bankruptcy. We definitely need some help. And Maud let me know, yes, more people wear masks, more people stay away from each other. The whole idea between social distancing and masks was to give the hospitals the ability to catch up. All right, seasonally adjusted claims, more people filed for unemployment. We're looking bad. Small businesses are getting their butts kicked. Small businesses are getting their butts handed to them. Primarily in the food services. I don't think we've ever seen an industry so singled out. It's been ugly. I still, boy, millions of people are without a work. It's unbelievable. Technology sectors, Intel and NVIDIA got beat up. China conduct mass surveillance. I don't know. I don't know. What I do know, though, today is Grubhub and Something Stop or whatever, the 2 big IPOs last week, got their butts handed to them today. IPOs are dangerous. With that said, I'm going to introduce you to a couple things that I received that I thought were very interesting. So, I get this RIA Intel, and I read this: never dismiss the 60-40 portfolio, optimize it. And when I start to read this, in March, the SP was 34% below record high. Conventional wisdom said active management was finally ready for a big movement. It was. However, it bounced back. The Do Nothing SP 500 had done plenty, exceeded 64% of active funds in its category. They come and they tell me that the 60-40 Bloomberg Index has gained 14.7%, outperformed the S&P's 12.3% gain. So when I say that to you, I want someone to tell me, what does that mean? In plain English, I need you to tell me, what does that mean? And I'm going to give you guys a second to think about it. And if you don't know or don't want to comment, just put a couple question marks in. But a 60-40 with 40% bonds gained 14.7% outperforming the S&P. I love it. Plain BS. ADP, awesome. Abraham, you're 100% correct. Kevin, I can't say because it's full of swear words. William from Europe, I love it. Again, 60% stocks, 40% fixed income. Correct, Jeff. The funny thing is, if you're outperforming, that means the 60% have to outperform the 40%. And if it's at 14.7 by 3%, maybe 5, it's at least, 8.3%, but you got to make up for the rest. You're saying your stocks outperformed the index, the bonds, by like 7-8%. So I started to do some research and I tried to figure out what the hell is this 60-40, they name it in here somewhere, Bloomberg, right? Year-to-date Bloomberg 60-40 index. So I start going through and I do the Bloomberg 60-40 index, and it actually pushes me over to Vanguard's 60-40. So basically Bloomberg 60-40 make-believe one is the same one as the Vanguard 60-40. And apparently now it forecasts returns to the next decade, which was BS. And so I did a little research, Powers Vanguard Group, okay, what is it called? The MCI All County World Index. I'm getting it. The Bloomberg Barclays Global Aggregated Bond Fund Index. I'm like, okay, let's start to find some of those indexes. And so then I get to the Barclays Global Aggregated Fund, blah, 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 blah. And I start to go through here and start to see what it's done. And I look at the performance. Okay, 215, 216. Okay, it started in 2018. This certainly didn't beat the index at all. Let's look at cumulative. Since inception, it's down. I started to go through some of this and I'm like, it doesn't make a whole lot of sense. It's not adding up. I went to what I uploaded for you guys. Because what we're told is that the overview, this crap only cost 0.1%. The tier rate is 0.1%. And oh my gosh, guess what? It has a prospectus I can go over. It was really interesting because I could also go to a fact sheet. What a bunch of garbage, right? Since inception, it hasn't beat the index unless it's some weird global fund index. As I went through some of the facts on the fact sheets, 5,560 holdings, maturity, I don't see the returns at all. The numbers don't add up. The distribution yield was only 1.49%, with a yield to maturity of even less at 0.85. I started looking at some of the weights and where money was placed. Some of these countries have lost, their indexes are awful. Absolutely awful. As I went through and started to see some representations and BS, I came over to the prospectus that I sent off to you guys, and I've got a couple pages here. So I'm like, this just doesn't make sense. Not only can they not make money, but there's no charges in it. It's unbelievable. Abraham, who's in Brazil, is making these comments, and they're great comments. Yeah, I've been exposed to all this blah, blah, blah. Hold on, Abraham. I lost it there. Europe, tax exemption sometimes. I've been exposed to all this blah, blah for years. It's not tangible, normally not transparent, and maybe super biased by the talker. I agree. So I was going through and I was reading some of this. And oh, it's in Europe. It's a global one. Okay. So why is the US 38% of it? And I started going through and just blah, 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 blah. But the short answer is when I got into page right here, page 13, it starts talking about borrowing money and pooling money and operational issues. And then for the next 20 pages, it starts talking about risks, how it can terminate its money. In fact, in here somewhere, they had the, what did they call it? The hot exit or something exit where they can just get out. If it loses 10%, they can just bail out of it. They called it something. I forgot what they called it. Like a hot get out, a hot link, a hot whatever. Permitted investments. Here we go. Give me what's that called? More permitted investments. It's all kinds of risky crap. Swaps. Where is, oh, there's concentration risk. Where is the hot something? Conflicts of interest risk, cash risk, commodities risk. Every risk available is in here. Counterparty risk, cost of buying or selling ETF risks, but your cost only 10%. Derivative risks, hedge fund risk, currency risk. Oh my gosh, there's all kinds of stuff in here. Direct trading risk, foreign exchange risk, fees and expenses risk. When they already told you, hey, it only cost 0.1%, including organizational, which they spelled wrong, and offering expenses, brokerage commissions, administrative, operating expenses, custodial fees. It's all in here when you start to go through this and you find out this is like a 10%. Futures and contracts risk, index tracking risk, international investment risk. I mean, it just keeps going. Leveraging risk, issuer risk. You go through about 20 pages of all of this risk that this dumbass thing is taking. And I'm trying to find what is called a hot something where they just can exit out of it. Oh, Russian investment risk. Ooh. But don't worry, if it's down 10%, they just have this hot link button that they can bail. Tax information. You've got tax risk. which explains that 10% withholding, right? Issuing risk, man, I wish I could find, I don't know, it's absolutely retarded. The short answer is I get to page 56. Wish I could find that hot button in here. I should have written that down. Maybe it is page 56, right? Track trading risk, secondary market risk. And I start going through fees and expenses, right? All the fees and expenses payable in respect to the fund fees are paid as one single fee, which is what they call the TER. And that TER risk has all the fees in it. It does not include extraordinary and certain ongoing costs and expenses as outlined below. Directors' fees and expenses, auditors' fees and expenses, a balance is paid to the investment manager, operational expenses, not limited to fees, expenses of investment manager, depository, administrative. I mean, it just keeps going and going and going. The investment manager may pour all its fees to a person that invests or provides services to the company. And you just start reading from page 56 here, and you find out their TER costs are nothing. The cost of listing and maintaining shares listed, the cost of convening and holding directors and shareholders meetings, professional fees and expenses for legal and other consulting purposes, the costs and expenses for printing, publishing, distribution prospectus, supplements, annual supplemental reports. This is the one that really killed me, right? The costs and expenses arising from licensing and other fees payable to index provider. The costs and expenses of any investment advisor appointed by the investment manager. Other such costs, not excluding non-recurring and extraordinary costs and expenses that may arise from time to time, which have been approved by the directors. Stamp and duty taxes. I mean, you're going to go through from page 56 to page 58 and 59 for the tax information and how you're going to hold, and things are taxed at a certain rate. And I mean, it's a 33% tax rate for certain things. It's absolutely shocking. Withholding tax, the international tax, if you're not in one of the, the cities here, it's just absolutely ridiculous. Page 58 and 59, it talks about extra fees and charges, which are hilarious. I also have page 64. I wonder what page 64 was. Maybe page 64 is my conflicts of interest. Holy crap. Talk about a conflicts of interest. How much they can go into debt, how much they can margin. Absolutely shocking. All the different things. May trade in the same route direction, transactions undertaken. If you want to see about how you get screwed, you don't pay attention to this crap because it's not true. You want to hear one that's even better? Not tax preparation. Want increased renewal commissions and more? Webinar. Help clients get the advice they want. Advice and grow your business, right? 7 steps to fill the advice gap and grow your business. Pre-retirees and retirees, you're not getting investment advice that they need. So here's the advice I'm going to be giving retirees. Ways that I can increase my first year commissions against you. Ways that I can increase my renewal income if I'm selling you funds. Ways I can lie and block out the competition. Ways to invest seeds for future sales. Better persistency on all the business. Would someone please tell me how someone that's a pre-retiree or retiree gives a flying flip about any of that garbage? How in the hell would I help pre-retirees and retirees, help them get the retirement advice, right, that they want and need, when all it does give me increased first year commissions, because I'm sure that doesn't come from the retirees, right, or the retired people. Increased renewals if I keep you in the garbage I just put you in. Ways to lie and block out the competition, then show both sides of the coin. Planting seeds for future sales where in 2 years I can churn you out of the shit I put you in so I get more commissions on the next one. Better persistency on all business levels. None of that is a reward to the retirees or the already retired, or the pre-retirees, excuse me. These are rewards of cross-selling where I can make a ton of money. You guys want to know why I don't do that garbage? Is because of that email. And I get 5 to 10 of those a day. Oh, Kevin, you don't understand funds. I don't think so. I'm pretty sure I understand them pretty damn well. Oh, you don't understand the protection of a 60-40. Yeah, you charge about 4.5% to make someone 3. And if you're up at 5, then you're giving them unlimited, ridiculous risk and high risk company bonds. Nothing's AAA or A or AA. It's all C-rated junk bonds. Oh, Kevin, you just don't know how to turn them in and out of stuff to make them so much money. Yep. I'm a real idiot for not putting them into funds that mathematically is impossible for them to make any money. Guys, this is the competition that's out there. There are a couple of you here today that have been kind enough to let me show you some of the stuff that's there. Hey, Kevin, I got this. What do you think? Hey, Kevin, look at this fund. What do I think? I can't say it any differently than this. If it's a fund, if it looks real pretty in a bow, it's going to screw you over and pay them nicely. The stock market is not pretty. The stock market is full of a bunch of sharks that prey on the middle America people so they can get paid to churn you in and out of stuff that never, ever beats the S&P 500. And not only that, it'll take from 2000 to 2019 for the S&P just to double once. And if it takes that long for the S&P to double, when funds can't beat it and they're full of charges, you guys are never making it to retirement. It's all savings for you. I recently got someone's 401k. Oh, I did so well. And we backed out everything that they had put in through this year's period. And for 10 years, in the greatest bull market in history, They made 3.13%. Let me say that one more time. In the greatest run ever in the U.S. stock market, the greatest bull market run in history, the last 10 years, they made 3.13% or 0.313%, a third of 1% every friggin' year. And funds that were up like 7.75%, double digits one year. When you back out all the money they put in, a third of 1% every year, a market that you can pick a low point and you will get a double, 3.13% over 10 years. If you don't like collar trading, don't like Hurley Investments, good luck to you. I will wish you well. That's what you're up against. Go for it. I don't care. I don't care because if you're that stupid, I don't want you guys. I do these. I take my time Monday nights and Tuesday nights and Thursday days. I answer the phone to help educate you guys on the stock market, to give you guys the tools to call bullshit when people are doing this to you, to help you see that I see it all the time. I get these emails on how I'm such an idiot because I don't stick you guys in this crap. How I don't get it. How in a year like this, if you're up 3%, not the 14% on the S&P, I should think that doing 3% on a 14% up in S&P year, that I've done a good job for you. I don't understand it. And the good news is I've got enough money in now that I don't have to understand it for people anymore. The accountability is now on your shoulders. It's where the accountability should have always been. That doesn't mean you can't bust my balls. You guys have every right to. You should. At a certain point in time, if I'm not doing a good job, you guys have the right, and I would expect you say, hey, Kevin, hey, last quarter, last half year, what's going on? If we haven't learned anything in 2008, it's that we should be caring about our money so that we make sure that we don't get screwed by these other people that are out there. You've got to care about your money more than I do. I'm putting the SMART goals in here. I'm going to go over this next week, but I'm putting it out here now for you guys to start thinking about it. I'm going to spend more time with this, but I'm going to do it next week. This week, I'm just trying to point out how you guys need to prepare yourselves for realistic expectations and the garbage that is out there. New positions I'm looking at for 2021, Walmart, Alaska Airlines, PayPal, Square, and I like PayPal well over Square, Carnival Cruise Lines, Rail Cruise Lines, MGM Grand. I also want to put in here Starbucks. I think Starbucks still has some opportunity or growth to it. I still like my favorites, Apple, Baidu, Bank of America, Boeing, Disney, Ford, Visa, Under Armour. Kind of those core positions, right? Smaller account, I still like Leaps, Ford, and Under Armour for the smaller accounts, but we still will work within some ETFs. If you ask me where the market's going to end this week, I'm going to keep saying higher. We still have a bit of a sell-off, although I'm starting to think maybe it's happened. I'm not quite sure. But because I'm not quite sure, we put Ford protection on today. We put Boeing protection on today. We put some Disney protection on today. We tried to do the best we can to save those opportunities for you. 2 comments came in. I think they're awesome. Finally, Baidu works. Sold the last of my 2 leaps on calls today. And someone else actually said, finally Disney took off. It's about time. Correct to both of you. What can you do in your portfolio to minimize losses, to finally let your stocks move? Welcome to the key in investing to both of you, Maud and Mary, with the 2 M's for the women tonight. Maud and Mary, exactly right. Finally, something works. Mathematically, it should have worked a long time ago. In all honesty, mathematically, these should have worked forever ago. But what can you do to not get your shorts handed to you to allow things to finally move? It should be a really nice profit. And it's patience. It's finding out ways to not throw good money at bad. I did one a couple weeks ago, the Warren Buffett way, to try to find undervalued positions that can go forward. It's just a matter of waiting for the market to realize something is undervalued. Dr. Gupta, Babu Gupta called me. He was planning to send me an email on Saturday. It just so happened I came off the lake, was frozen, saw it come in, and I gave him a call. And the comment was, good call on Disney. And I was like, yes. It was a great call on Disney. I agree with you. But that call was made back in March and April, back when they were looking at Disney Plus, probably last year, right? Finally, someone last year allowed me to, someone probably listened to me last year as an analyst and finally went to town on it this year. Jim, I'll definitely do that. All right, so our markets, they're doing nothing more than coming off of overbought. I'm not necessarily impressed with the Dow. It's not a big enough index, but I like the S&P. I like seeing the drops and the runs up. Probably a drop. We'll probably have more run up in the end of the year, and then we'll end up taking a repeat of this year. I like still being in technology. Remember, we were told FANG was dead. FANG was dead. That's awfully damn good looking for dead. Well, Kevin, the NASDAQ isn't FANG. I get it. But like 84% of the NASDAQ is FANG. And for the dummy that said the NASDAQ was dead, right here, you only missed roughly 1,050 points, 1,500-ish points, you know? Oops. It's only 10% of the index. Oops. All right, let's see what else I have for you today. I'm still giving December a 2.5% growth. Not a whole lot by way of earnings. Nordstrom's tomorrow, Lennar, Carnival Cruise Lines, JBL, Rite Aid, BlackBerry, FedEx, Nike, and Darden Restaurants on Friday. FOM rate decision on Wednesday, not important. At least it shouldn't be important. Retail sales will probably be more important. Leading indicators and options expirations for the month on Friday. I'm not paying attention international right now. There's nothing going on internationally, even Brexit, that truly will affect our markets the next 2 to 3 weeks. So I'm not even wasting my time or looking. How am I looking to trade? Again, how far to let stocks run? There were 3 stocks today we put protection on. Boeing, Disney, and Ford. Disney, we did bear puts, 170s, 150s. Ford, $9. I think we're at 230s for long puts on Boeing. I found an interesting article, Baidu's not an aging dinosaur. Please feel free to read through it. It's very interesting. I might have already had this one recently, but I want you to read it one more time. We have Apple's revenge on Microsoft, a very interesting article. Again, the reason why I believe and invest so heavily in Apple, a great understanding of where Apple can go against its biggest competitors. That's an ugly picture. Might have to do a little bit going through here, but do read through this so you'll understand a little bit of what I see and where my numbers are explained in words. This is a very interesting article on the competitive advantages of Apple. If you ever wondered why these numbers work out for Apple, here's why. Go through it. My last one, I did not do a good job preparing. My last one, a little bit on Carnival. I might have 2, but here's why I'm looking at Carnival Cruise Lines as possibly a breakout stock for next year. Here's the basic information on where it could go, on why I might choose to start to put some money into Carnival Cruise Lines, Royal Caribbean, and MGM Grand, and or even Marriott. But a pretty good understanding of when a stock is just too cheap. It's all mathematical you put into this, and I think you guys will find it interesting. Any questions for tonight? I just wanted to share with you guys some of the garbage that's out there. Some of what people are soliciting me to do to you, so that you can understand that if you have other money elsewhere and you start to see those kind of solicitations, if it's in a fund, it's not your friend. The fees are there to make someone else profitable and not you. If you have a percentage of a stock, 8.54 shares, it's in a fund of some kind. But Kevin, you can now trade partial shares. Yes, it's in a fund that they hold, that they distribute partial shares out, and you get charged for it more on the back end. Please understand, the stock market is not a pretty put a bow on it ATM machine-like environment. It's a dog-eat-dog world, and the big dogs are already at the top of the hill, which is ridiculously hard for retail traders, for middle America, to ever get up to in any significance, to have any importance. Don't get eaten by the dogs of Wall Street. I don't see any questions coming in. Let me make a comment for 30 more seconds. Next week, I want to bring you guys down to reality. I want to go over how to properly set goals, how to set your expectations, how I'm looking at next year, and how it wouldn't surprise me if I can nail it exactly if we see a repeat of this year, if not worse. So I'm going to go through what I'm looking at and what I'm going to spend my time when I take 2 or 3 weeks off from going through these with you guys. I'm going to explain to you what I'm doing with my time so that you see how I prep for a next year So you know that no, I'm not just taking 2 weeks off in Christmas, but so I'm doing nothing but gathering information for 40 to 50 hours a week so that I'm comfortable with where I'm putting your money and my money going into the future. I see no other questions coming in. Guys, have a great evening. I hope this was helpful for you to see what you're up against. I hope you get, as you're now seeing the other side of what I'm in, I hope it's helpful for you guys to look and see, you know, for crying out loud, those sons of a guns that are managing maybe other funds that I have. I want you to see what they see. I want you to see how they're enticed to put you into new things. None of that email was for your benefit. It was just more fees. How do I make more money off of you? I could go spend a 2-hour webinar. I could get an education credit for doing that. What a joke. What garbage. No other questions came in. Guys, have a great evening. I appreciate you being here. Jim, I'll get in touch with you here in just a minute. Take care, guys, and have a good one. Bye-bye.